Perfect. All right, guys. So we are here. More Money, episode 14.
Nice.
1-4. Dude, what did you think when we started this? We were making like this far? Like we were.
No, honestly, when you first came up with the idea of the podcast, I was like, great, we'll do a podcast for 2 or 3 times, and then we'll probably forget to do it again, and it won't be a thing. But here we are. What is it? 5 months now, and 14 episodes later, and yeah, we're doing amazing. So that's really cool. And
we have not talking about mortgages today.
Yeah, we're not talking. Well, not directly about mortgages.
No. We're talking about random stuff today. So today's just our random Q&A that we thought about. And we're gonna let you, the audience, cue us.
Guys, we've got a great guest for you today. Many of you that are following us on YouTube or on LinkedIn will know who this is. And Sue Buswell is with us today from Sue Knows the Score. She is a credit guru out in the marketplace and has a lot of great information about what's happening with credit in general, things about what you can do to get yourself into a better position. Well, let's go ahead and do a quick intro from you, Sue.
Yeah. Hey, good morning, you guys. Thank you so much for having me. I'm delighted to be on the More Money Show. And I pointed out, I added it to my board. So it's not just Sue Knows the Score. It's Sue Knows the Score and More Money this morning. So nice. You need both. You need both in mortgage, right? You got to have more money and you got to have some score information. So I'm happy to be here. I've been in the credit space too long, starting in 1985. I'll let you guys do the math. I ran out of numbers trying to do it myself. So anyway, I'm just happy to be here and talk about scores and credit. It's boring, like I wrote in my book. I think you read the book, right? It's boring unless you're rocking an 800. No one wants to talk about it. But I want to make sure that loan officers can empower their home buyers. And so that's what I'm here for today. So you guys tell me, what do you want to know?
Love that.
That's awesome, man. Empowering home buyers. Credit is such a big thing. Notice how when she mentioned the years, I didn't make a joke. So
Sue, if you've ever watched our show, so I started in the business in 1995. And if you ever watch our show, he doesn't usually make it more than about 2 minutes. And I mean that 120 seconds at a time before he tells me how old I am.
Yeah, I got you beat there, Roy. So Joelle, you can go ahead. Drop them. It's okay.
No, not for you, Sue. Not for you.
I started before FICO, right? And now I'm gonna be here when there's another player in the market. I'm so excited about that. So
crazy.
That's crazy.
That's crazy. So I think that this conversation of credit is so absolutely important. We had guests. We've had multiple guests on this show. Yeah. A lot of guests, and we have Ali Cardi, and credit was brought up then. We had Brian Vo, credit was brought up then, and I think credit is just such a repeating factor in anything that we talk about mortgage and any topic that we go through, especially myself. I come from a Hispanic household, right? From a minority household, and credit is not something that I would say we take very good care of, right? Because we don't know about it. Most of people that I know are either first generation immigrants that came here from Cuba or South America, right? My mom's Venezuelan, my dad's Cuban. I'm second generation, thankfully, right? And I got to learn that myself. But my parents, they have very good credit because they're technically I'm third generation. Because my parents would be.
No. Were your parents born here?
No, they were born.
So your parents are immigrants.
Yeah.
You are first generation.
Okay, so I'm first generation. Okay, I didn't know that actually. So they came at a very young age and whatnot. Now, my mom's credit before she met my dad was terrible, because she just consumed credit cards, stuff like that. My dad came here when he was 2, so he grew up here. And my grandpa was a very, when my grandpa came, he came from a communist, country. And what happened was that he saved every penny he had. So I don't even think he had a credit per se. He just paid everything cash. But I guess since he did all that, he might have taken out one credit card that never had $1 on it. So that's why his credit was good. But they didn't understand the power of credit and what he used to leverage it. And especially these days, back then you could purchase more things with cash, right?
Sure.
But these days, the amount of cash that you have in comparison to what things cost are very hard to do. It's hard to pay a car in cash these days. The car's $50,000, $30,000. Very hard to pay a car in cash these days. You're not paying for many houses in cash these days, right? So I think credit is so important. And I honestly think that's why this is one of my favorite conversations as far as for myself personally. This is why it's home here. So we want to start off the conversation, right? With just kind of getting into a little bit of the basics of credit and what we can do as consumers to maximize our credit profile and improve our credit to the best of its abilities.
Yeah, so I think there's a couple of things that you can do, and it's going to lead into, I think, some further conversations for us. But for me, as I say, when I was 18 years old, I started working at a TransUnion credit bureau. So I had an opportunity to learn about credit at a very, young age. I hadn't got my first credit card yet. And I was able to learn about it also, not just how to get credit and use it, but what it means, right? So back in those days, we would read credit reports off of 3x5 cards, right?
Oh, wow.
We'd be like, his name is Roy George, and he has 4 trade lines, and he, blah, blah, blah. He's an R1. So, I'm reading this stuff without knowing what it means. And, here I am in this business almost 40 years now. And I feel like in a lot of ways, I'm still teaching loan officers the same things I've been teaching them from the 80s. So my audience typically is loan officers, but loan officers are consumers. So what can we do to educate ourselves early on? And I think the US trails significantly in other countries in teaching financial literacy. There's a lot going on in that space, finally. But on my LinkedIn pages, I've talked a lot about some apps. So there's apps for kids today, right? Which is great. And I can send those after the podcast. So you guys have those if you want to dispense them. But I think it's awesome to have that information to start teaching kids at a young age that, borrowing and getting credit, it's necessary, but you have to understand you want to use other people's money and you don't want to pay them interest on it, right? Except for the big purchases, house and a car. So I think that's an important lesson for us. You can get a lot of that off of any of the apps. So for adults, there's monitoring apps out there. There's a ton of information. And then in the mortgage space, obviously, if you're getting ready to be a homeowner, you need to understand what's on your credit. You can go to annualcreditreport.com, pull the credit report, review it. And if you don't know how to review it, you can go to my website, SueKnowsTheScore.com. I've got a ton of information out there for consumers and for loan officers. So pull your credit report, understand what's on it, monitor it. And then if you're getting ready to go into a mortgage transaction, work with a trusted advisor.
Love that.
That's that. Sue, real quick, I don't think we gave you a proper introduction. We know you've been in the credit space for 40 years, but we just read the book, Rethink Everything You Know About Being a Loan Officer. You had a section there. You kind of told us a little bit of your background there, where you started up your own thing now. Can you talk to us about that as well?
Yeah. So, and I say this in my chapter in the book, I was really excited to be asked to be one of the participants in that book, but I said it in there, it came at the right time for me because I was part of one of the mortgage, layoffs that we were having in 21 and 22. So I had been with a credit reseller for 17 years. I had been with a credit reseller prior to that, but this company for 17 years. And from, the position of being in operations and starting a mortgage business, as far as mortgage credit reporting and all of that, I did do a little bit of loan officer at one time in my career. So I understand some of what you guys go through, but I was like, man, I got to go back to credit. That's just too hard. That's a lot of work. I want to teach them. I don't want to do that. So yeah, here comes Brian from FinLocker, and he, and I connected through LinkedIn. We will finally meet in real life at the gathering in a couple weeks.
You haven't met him in person?
I have not.
Wow.
No.
Okay.
We have been partnering for, like 14 months now. And I've not had an opportunity to meet him in person. So you can build good relationships on LinkedIn without the IRL. Yeah, absolutely. And it gave me an opportunity to say, hey, man, I had to rethink everything because I'm sitting here going, wait, I don't have a job. Like, what do I do now? Luckily, I understood what I needed to do from a financial perspective, right? So I took those steps, protected my credit, and I thought, I'm gonna launch Sue Knows the Score. I've never been able to share what I know at the level I would like to do it. So I built a brand for a year and did some other things for work. And this year I decided I'm going to lean in and build a business. Awesome. So today, everything on my website is free. If you go in there and you want something, you want a loan officer's guide, which I threw up a guide. It's like 11 pages, 8 of the most frequently asked questions and the answers, how to talk to people about it. A conversational style is there. I'm working on loan officer training guides. So that will be a service I'll be offering, is training. And it will be, everything from how to read a credit report, how to analyze a credit report, how to maximize your credit use. Because after 17 years as a credit reseller, I'm used to what lenders are doing in a wasteful way as it comes to credit cost. And I can help them understand how to do better business and how to help their loan officers understand how to do better business when it comes to using credit and some of the tools. So there's going to be multiple things coming out under services. I've just kind of slow rolled my way into it, right? It's my friends like, you're building a business. I'm like, I don't know.
One of the biggest things when you're an entrepreneur is, not moving too quickly, not jumping into, something that just may be a trend, and unless you're really backing something that's brand new, that's a trend, it's not always going to be great to be first to market. Sometimes you just want to be the person that's slowly or quickly following the first to market player.
Yeah. I think the one thing that I found in this space is there is an absence of training for loan officers on credit, and there always has been. And that's why when I said in the beginning, there seems to be, I'm answering the same questions that I was answering 40 years ago today, right? And it's because there's just not easy access to consumable, relatable, actionable training for loan officers.
Hold on, before your thought, I that just made me think of something. So what do you think that is? So when I came to Moore, I got hired here as their president 4 years ago. And time passed, things changed, lots of things happened. Ended up becoming, the owner of the company. And then Joel came along and pitched an idea, and I said, hey, what if I gave you a stake in the organization? And he said, yeah, I want to buy in. And I was like, you know what? I think Joel and I could do something amazing. He's got the same kind of drive that I had when I was his age. But I found through my years that a lot of people don't take the time to apprentice someone into their space. And, it sounds a lot like that, right? Like there's so many LOs aging out, and there's so many mortgage people aging out, and nobody's really sure. There's a succession plan. Somebody's going to take my position when I retire, but you didn't teach them all the tricks of the trade so that they could step into that role the same way and function the same way that you did as the amazing leader that you might have been wherever you were. I see that a lot in today's market.
I think what's happened, to kind of answer your question, yes, I've seen that. And it really breaks my heart. I think that was the only part of the layoff call that really, broke my heart, is I had all of these people who were relatively new to the credit space, right? So imagine you're a credit provider, and all the people that you rely on when you have questions on a credit report are given an overview, probably to the same level that loan officers, of what credit is. But they're not brought up into the details of it, right? To understand how the scores work, to understand what all of those things mean, right? It takes time. So there's a lot of thought that they'll learn that on the job. I've never been that way. I've always been the person that I'm always training my replacement. That is my goal. That's my place. It doesn't matter what my position is. I was a sales rep down in the Texas market. We were hiring people to sell credit reports that last week were selling, plumbing parts. And I'm like, they're a great sales guy, but you can't relate a pipe to a credit report. So who's training them the difference, right? So I started mentoring other reps. What's that, Joel?
A collection account's like getting hit with a pipe. I mean,
it is. But if you don't understand, I can call a plumber to fix that stuff. Who are you going to call when
right.
It's not that easy. And who are you going to ask that question to if they don't know? Right. So I'll share something with you that I read this week on LinkedIn. It was a sales manager saying that they were talking about some loans that had fell out. And out of 4 situations, there were 2 that were credit related. One of them was the guy didn't make his payment last month. And I'm all but screaming at the computer as I'm reading it, going, courtesy deletion, And so I DM'd the guy and I'm like, hey, I'd like to help you with, right? Because if it's a one-time late and the guy's never made it late since then, right? It was never late before. He likely can get that removed. It's like an oopsie. They'll give you a one-time pass on that, right? Who are you going to call? I feel like you're going to call Sue. But that's where we need to train our loan officers. That should not be a turn down, right?
Yeah, no, I agree with you. You know, in my many years ago when I was still in the servicing side of the market, and I don't mean in the last 10 years, because I did have a small stint at a bank where I was both on the servicing and origination side, but early in my career in the 90s, I was with a servicer, and during that time period, I would get those kinds of requests. Every once in a while, it would just be somebody calling in and say, hey, could you please remove that late? And we would actually do it. Yeah. And, you know, it's so funny that you say that today, because today, I don't think anybody knows that they can just simply call in and say, hey, this is a one-time thing. Can you just get rid of it? Today, it's like, hey, let me, you know, you go online, you find somebody that says, I'll help you get rid of that late. And it's like, you pay them money and then you fill out some documents and then they submit it on your behalf. And it becomes almost like this tedious thing to get this one late removed. And I remember, you know, 30 years ago, I'm going to say 25. I like 25 better. I'm going to say 25 years ago, you know, it was simply a phone call and, hey, this is what happened. I'm sorry it happened. Can you get rid of that? And we did it.
Yeah. Absolutely. And that's the thing I think that people don't understand is that, and that's why I don't talk about credit education, because someone said to me, hey, Sue, I'm going to educate you this. And I was like, you don't need to teach me nothing. Right. So, I don't say that. I say credit empowerment, right? Because how do most adults feel really when you say to them, well, let me educate you on this, right? Some people might have an open mind and not worry about it. But I thought my immediate reaction was like, you don't have anything you can teach me, right? We all can learn, but empowerment, right? So empowerment through information, and then you can help them elevate their score and where they're at and what they want to achieve. So to kind of go back to what Joelle was saying, when you empower a home buyer, say in their 30s, they're going to go back and talk to their friends and their family. Now, if their family has never understood credit, or never bought a home because they didn't think they could because their parents were cash buyers, you have changed the generational opportunities in an entire family. And I think that's where we're going in our market today. We're no longer transactional. And that's another part to answer your question, Roy, is that we became a transactional organization, a transactional industry, right? Get them in, get them out, get them in, get them out, get them in, get them out, right? It's about units. Well, everyone needs to work and make a living, but these are people having a human experience. And at the end of the day, we're serving the guy who's just trying to put his family into a safe place so they can sleep at night and have some ownership and some equity. That's who we serve. That's who everyone in the mortgage industry serves. Yep. So I think the credit piece of it was often offloaded to the processors and the underwriters, and the loan officers were just told to go sell. And I get that, but man, I would rather differentiate myself. I used to say this to my sales teams. Your opportunity for success is right here. If you hand that off to somebody, you darn well better trust them with your life.
Right. Absolutely.
Right. Wow.
I think that was really good, Sue. That was really good, Sue. I think that one of the things that is very important is that education piece and NOMA, right? That's why you're a content creator, right? You create content that's out there to educate those around there and people so they can have a free platform. And I think right now it's like the most amount of education that we have available at any given time that we've ever had, right? Like you can just go to mortgage and more money episode will pop up, right? You can go to, hey, what's credit, and Sue knows the score will pop up on LinkedIn. Like those are big opportunity. I think not enough loan officers or people are taking that opportunity to do that or inform themselves or learn, right? And it's also it's not even the fact that we have to teach them everything about credit, right? But if you can direct them to the place to get information, right? Other than just using some specialists, right, to help them fix, right, then you're still going to be that resource for them and that guide for them. And I have a very similar deal right now. I have a lady that needs to get up to a 640 score. We're using the tools, the what if simulators, what cards to pay down, kind of like, hey, this is why the card needs to go here and there. This is why this score needs to be there, utilization, all this stuff. Once we get into this area, then we can move forward from there. But honestly, unless your credit is like destroyed and demolished, there's nothing I can really do right now until 12 months, then That's where I go from there. But if your credit is on the borderline, I'm like, hey, listen, we just need to do X, Y, and Z, right? Like, and then all you got to do is for the next 6 months, pay off this card, try to call in reports, right? And then if we can get lates removed, we can get lates removed, right? But it's about helping them get the home, whether it's 6 or 12 months, and choosing that education piece. So that being said, Sue, we always want to give our viewers some tangibles, right? Some tangibles they can walk away with and what they can utilize. So my question to you is, okay, so credit repair service or self-educated material that the consumer can take and actually go and use for their own benefit. What do you recommend and what resources are out there for them?
That's a great question. So I think it depends on the individual. Do you guys take your clothes to the dry cleaner? Do you have a laundry service?
Yeah,
okay.
Some clothes, yes.
All right. So if you can take your dirty laundry to someone to make it clean, I do believe that you should have the opportunity to work with a credit professional who can help you clean up your dirty credit report. Where I differentiate that from is the promises of we can get rid of this and we can get rid of that. As long as that company is doing business in the right way and they don't start off with just sending a dispute comment to everything, right? So the consumer needs to be empowered to understand the difference between credit coaching, credit counseling, and then credit repair that's out for, money versus help. So I think that there are opportunities to do that. I think there are good agencies. The place where I would refer a consumer today would be the CFPB's website, because they actually do list information about credit repair companies, right? So why not go there, right?
So can you let our viewers know what the CFPB is?
Consumer Financial Protection Bureau. So why wouldn't you go to the place that's named to protect you? So the Consumer Financial Protection Bureau has a site that talks about credit repair, and it will list some companies that have had enforcement action, so you know who to avoid, and it's going to list some companies that they recommend. There's also the National Foundation for Credit Counseling, which is going to be a free service to the consumer. There's another company that I'm a big fan of, which is called Working Credit, NFP, Working Credit Not-for-Profit. They're in Chicago. They are truly not-for-profit, and they do a ton of credit education. They put someone through a year-long coaching program if they want for free. So it's a huge organization.
Does that person have to be in the Illinois or Chicago area, or can they be
No, they're nationwide.
That's awesome.
Wonderful. Mm-hmm. Okay. So are all these,
so there are some
these resources, by the way, just so we can make that known, these are free resource guides, right? By either, are these like, I don't want to say government-backed agencies, but reputable agencies that work towards the consumer, right? Not just from private health companies.
So Working Credit is a nonprofit company. They are not backed by the government. Okay. The National Foundation for Credit Counseling can refer you to multiple credit counseling agencies and will give you a description of what they do. Those are all nonprofits, free to the customer. The Consumer Financial Protection Bureau will also list some of the nonprofits, but they'll also give you some information on credit repair, credit coaching companies. Wonderful. Sue Knows the Score doesn't do any type of direct-to-consumer consulting. My audience and my customers are the mortgage industry. Right. But on my website, for those consumers, you guys, I'm exclusive to the mortgage company. So for consumers, though, they can go to my website, and any of the materials they find there, I have a bunch of downloadable information, everything from budgeting to talking about how to do a courtesy deletion, checking your credit report. That's all free. You can go out to my website. So some people don't want to talk about their credit. They want to self-serve. And I think you'll find any number of places on YouTube, TikTok. That's not my space to play in. So I would say if someone has a question and they're not sure where to go, they can always connect with me through my website, and I'm happy to help direct them.
That's an interesting line of this conversation has brought up some interesting points, right? So, we kind of talked about dilution of skill set, and that's a really interesting play. I come across that a lot in today's market, right? Like when I meet loan officers who've gotten their license in the last 5 to 10 years, they're of a different way of doing business than the loan officers that I know from the early 2000s or the 90s, and some that I've met over the years that have been loan officers since the 80s and maybe before that. But you're absolutely right. I notice with the more seasoned loan officers, their skill set is different, right? They can talk about credit. They can talk about guidelines. They understand those things. A really seasoned loan officer can actually go through the points of credit repair without having to go to a third party person. And I don't know if it's because we let the industry get as diluted as we've let as it's become, or if because we saw so many opportunities for efficiency in generating new business, right? Like today's mindset is, let me get as many loans in the door as possible. And it's not, let me coach 100 people for a year and then eventually turn them into my book of business that's going to generate me business in the long term. It's more of like a, how do I get a loan closed right now? And then if I happen to remember to send a birthday message or an anniversary message, I will. But a lot of loan officers don't even remember to do that. If it wasn't for some of the automated systems out there, they wouldn't be sending anything. Now, I mean, that's gotten better too, right? With the birth of AI and AI coming into our industry, you're starting to see people mimic themselves in voice, in text, in email. And now those systems are sending out the, hey, happy anniversary on the purchase of your home, or happy birthday. And not for nothing, Joel's actually just finished building out a really cool CRM that is AI driven, right? So a lot of those messages are going out in that format. And from an AI perspective, many consumers can't tell that it's not him because he spent 3 months training that AI to act, speak, talk, type just like him. It's interesting to see that dynamic shift over the last 40 years.
Yeah, it is. And so I would ask Joel, since you and I are the seasoned folks here. So Joel, where do you feel like your credit empowerment information sits as you talk to customers? And I'm going to ask one more question on top of that. So where do you feel like that sits? Number 2, are you creating successful home buyers or successful homeowners?
Ooh, that's a tough one, but
that's a crazy question. Okay, so you got to repeat the first one for me. That one, the second one threw me off there. So first.
Okay, so where do you feel like your credit education, credit empowerment skills lie? Scale of 1 to 10, 10 being, I'm Sue knows the score.
Yeah. So, I would say honestly, definitely not 10. Sue knows the score, but I would say a 7 or an 8. Right. I'm able to tell a client and understand what's affecting a client's score right away. Right. And I'm pretty good at letting the buyer know. It's like, hey, this is your first late. I knew about the courtesy late, right? I knew you could call the creditor and the bureau and say, hey, listen, put your name here, remove this, ask them for some leniency on you, because I know that at the other end, it's not just some robot saying your late payment, you're done, right? No, right. There's another person that you can reason with and negotiate with. And if you're hard enough, they will say, yeah, leave me alone. Here it is, right? I know that you get a letter, right? That you can get letters mailed to you, right? That will give you the proof, and then that we can go back to the 3 main creditors, Experience, TransUnion, and Equifax, and say, hey, here's from the creditor. Here's they're saying delete the score, go delete the score and give me a new report, right? Now, I'm very big in the notion of I like to use the experts around me, right? I am not saying I'm a credit expert, I'm a credit guru. No, I got the basics down packed, and I can go through a credit score with you, report with you, and tell you exactly what is hurting you and what's not, right? Yeah. I can tell you everything from that. But if for the harder things, removing collections, removing late payments and whatnot, I personally do have someone that I utilize, right? And it is a friend of mine who has personally done my credit and has worked on my credit and removed the collection for me. And I understand that person is good at what they do, and they steer clients the right way. They're not, and not throwing shade at anything, but they're not hey, pay a monthly fee and we'll never get anything resolved for the next 12 months. No, it's like, hey, pay for this action and we're going to get this action resolved. And once it's action resolved, you're good to go and you have a good time, right? He even got me on a credit, there's a bunch of free credit monitoring tools, Experian.com, Credit Karma, annualcreditreport.com. But I'm now paying for a service because now that service tells me every little action on my report and actually gives me a pretty good estimate. So I'm even telling consumers, hey, if you want to take the extra step, this is $30 a month. It's really inexpensive, right? And you can monitor anything that happens on your report, such as like literally I get dark web stuff sometimes. I'm like, hey, your account is there. And I'm like, oh, whoa. I got to like make sure that it's not going, not doing this, right? But that's the deeper part of it. So
your answer to that, to the credit expert part, leads me into, are you creating successful home buyers or homeowners? Because you're setting your people up for success to understand that getting into the home is only one part of it, right? It's 100%. Owning the home, right? And I think that's the difference that people are starting to realize today. You've built a group of people around you, right? So you have referral sources that are going to help you. So it's not my goal to give every loan officer out there Sue knows the score education, right? First of all, who wants that in their head, right? You guys got too much stuff going on, right? So, well, we'll talk about that. I'll get a flash drive, send it over to you, and just download that. But so that was the second part of the question, right? Are you creating a successful home buyer, which I think is where the transactional loan officers have stopped, right? Well, and they may be doing this rescore and they may be doing that, right?
And Sue, I actually want to piggyback off that. It's crazy that we've mentioned that, right? Because, and Roy knows this as well, I've changed the way that I do business now. And one of the big things was Rethink Everything. That one kind of opened up my eyes and growing more business. So I really sat back and I said, how can I grow more business? Like, how can I get more business? And what I was really understanding was that education piece and being able to empower my clients keeps them coming back. I'm like, I'm missing a huge part of this, right? So recently, I've actually started to partner, right, with financial planners, estate attorneys, CPAs, and that referral group, right? Because I do two things, right, that I do and I learned from my coaching, right, was a 7-day post-close consultation, right, where I sit back at the end of our closing, I sit with you and I talk about how to make your first payment. How do you feel about being in the home, right? What's some action steps that you guys can take? Are you working with a financial planner? Are you working with someone that can help you because a home should not become a liability. A home should become a vehicle and a tool to build wealth. And if you're not taking the ability to build wealth, right, with the home, what are you doing, right? And as loan officers, we are to put you in the right place and protect you with the right people that are going to help you. Hey, because you bought a home, right, you may be paying a little bit more for rent, but when next year comes around, this CPA that I've connected you with is going to show you all of the tax deductions that you're going to get. So your federal refund is going to probably be higher, which will negate the higher payment that you had on the home, right? Plus tell you your equity and appreciation gains, right? And then from that federal refund, instead of taking that federal refund and going to spend it on a new car, no. You're going to talk to a financial advisor or a planner, and you're going to invest it in a retirement account so that by the time you're 65, you're not still working to pay a mortgage that you, quote unquote, couldn't afford. So that's the game plan. And that's done through the post-closing consultations and my annual mortgage reviews, where regardless of you bought a 2% rate and the rates are at 7%, I'm still going to sit with you and I'm still going to say, hey, these are the opportunities that are available. If there's nothing to do, there's nothing to do, right? But now you got some equity gain. Maybe you want to consider investing in this account, liquidating some debt, right? We want to consider all of our options. And are you working with professionals to get you ahead of the game?
So that's amazing. And I hope Brian and Kyle will turn into this episode, because I think you just wrote a chapter and we can QR code that piece of it, right? And it's the difference between creating a home buyer or a successful homeowner. Because if you're doing all of those things and you're empowering them, you're informing them, you're elevating, you're helping them to elevate where they're at in their life, right? That's what homeownership can do. And that's what the right loan advisor can do. So that was really getting to that piece of the question, right? So yeah, credit is so important. And I've thought about this over my years as a credit reseller, right? You can't even start a serious conversation with a customer without pulling a credit report, right? You can't even start it. But so many people have deferred the knowledge of how it works to someone else to close the loan. You're not doing that. The More Money team is not doing that. You are building a process that's going to build successful homeowners, which will in turn build a huge referral pipeline for you, right? Huge. I mean, and it's giving. You're giving all of that away. And from that, you will get this, you will get the next loan. You don't have to work as hard to fill your pipeline.
And that's the goal, 100%. So Sue, we're wrapping it up here. So we're getting closer to the end here. But I did want to ask you, we've been talking so consumer centric right now. Yeah. Let's talk about some changes of credit to the industry, right? We've been hearing some, you were talking about the buy merge, right? You were talking about 5 credit scores. So talk to us about some of the newest changes coming to the industry, how they're going to affect loan officers and what loan officers can do to best prepare for this. And again, empower their homeowners through this.
Absolutely. So there's 2 new score models coming. I have talked about this for over a year. Vantage Score 4.0 and FICO 10T are coming to the market. Now, if you want to go out to my website, you can get the current FHFA guideline on it. They've updated their book. I just keep it there and the updates stay there. So what I read this morning in the guideline was interesting. Vantage Score 4.0 is going to be releasing their historical data sometime in Q3 of this year. FICO 10T is still somewhat hesitant. They're not ready to release that data. It says in the timeline that the activation or implementation of FICO 10T will depend on the release of that data. So I'm reading through between those lines going, we may have Vantage Score 4.0 on credit reports before we have FICO 10T if they delay in releasing that information. So that's an interesting piece. But why are we getting new score models? First of all, the score models we're using were first created in '93. A score model is supposed to be a risk predictor. So let's think of it this way, right? So Joel, if Roy borrows $20 and never pays it back, and then he borrows another $40 and he never pays it back, and he borrows $100 and he never pays it back, and he comes back and like, hey, I need $200. Are you going to give him money?
Absolutely not, yeah.
Yeah, that's all scores are doing. Like, what's the likelihood that somebody's going to pay me back? But the scores we're using, 2, 4, and 5, are old, right? Started in '93, and I did a video on this. I'm like, scores are like Toyotas, right? Does Toyota build a brand new chassis up car every time they put a car out? No, they don't,
Nope.
Right? So that's how scores are like. They are built on a foundation of historical data, and then they're modernized. So 4.0 and 10 will include rent payment data, which I think is significant, right? Absolutely. So all those renters who right now can't get a score, my brother is one of those, right? He counts with Vantage Score. He's been making on-time rent payments for 2 years. Some people don't want credit. I am not a big debt to live person. So I think you have to learn how to have credit, right? But Vantage Score is going to open up the opportunity for people to be seen and to be scored because they only require 1 month of history in a 24-month period. FICO requires you 1 month of history in a 24-month period. Now remember, we're still talking risk predictors, so you're like, 1 month of history, how do I rate this? We'll see what those scores look like. But if you can start at a 620 and then you can start coaching that customer through the process that you're talking about, in 6 months, you can have a much higher score if you take these steps, right? FICO is still going to require 6 months of history on an account before they'll score you. So let's stop there.
I'm so interested to see how this is going to play out when they do launch and we're able to use them. I've seen prices increase for so long, right? And now I'm sitting here thinking to myself, a single borrower on a mortgage transaction is paying $50+ for a tri-merge report.
Yeah.
And that doesn't even include this new Vantage Score and this new FICO 10 score. And for a short duration of time, until they actually figure out what it looks like, we might have more than just 3 scores showing, right? And we may have scores coming from one space and scores coming from another space that will have different costs. And I'm thinking that these credit reports are going to be even more expensive than they are today.
They are. And that's what the industry needs to understand is the buy merge is not going to necessarily lower your credit cost, right? First and foremost. So the buy merge is going to, from what I'm reading and hearing in the FHFA calls that they're having, is it will be the buy merge will launch and you will have 5 scores per borrower. Credit scores today are being priced between $6 and $8 per score. So If you think that going, average cost today, the differential between a 2 bureau today with 3 scores and a 3 bureau is about $20 on an individual and about $30 on a joint. Add another $12 to $18 to that cost, and you're not going to save anything. We won't see credit report cost reduction until the existing score models are retired, which are supposed to happen the end of 2025. And then we'll have still 3 scores per bureau, per borrower, but 2 models. So you're going to have a FICO score 10 from Equifax, Experian, and TransUnion, and a Vantage score 4 from TransUnion, Equifax, and Experian, right? So you're going to have 6 scores per borrower if you're doing a tri-merge. You're going to have 4. So I keep trying to look at what is the score disclosure letter going to look like, right? And how do you explain that to a consumer? But costs are not going down. Forget that. Costs are not going down. And any kind of gaming, like pulling a 3 bureau soft to make sure you're pulling the highest 2, they're going to be looking at that. That idea that's gone. That ain't going to happen.
Wow.
So a lot of, this year has been insane already. There's been so many changes to every sector of the business, right?
Yes.
Yeah.
And it's crazy. So I think it pays to be watching the More Money podcast so you get the insights on this, right? So
100%.
If you're watching this, you're welcome. But that is so interesting to me. So I think, and Sue, okay, I know you've mentioned your website, but what's the actual website name? SueKnowsTheScore.com?
You got it.
SueKnowsTheScore.com. It was a wild guess there.
Yeah, you did great.
Awesome. Do you need to add anything?
No, go ahead.
Yeah, so Sue, that was really good information. I think that with the Vantage Score and FICO 10T, we're going to be seeing some pretty crazy things now that, we did a podcast on how lender costs are going up already and how this, we share some strategies on our other podcasts as to how to do a soft check, buy merge and kind of understand how to utilize that to help your borrower guide them at the pre-qualification route, right? Because if you're pre-approving, if you're pre-approving 20 people per week, that can get very costly, especially if you're looking at a 20 to 25% conversion ratio, right?
That's right.
So Sue, to end this off, we just kind of want to know, hey, I know you've mentioned a couple of resources. We want to know some really exact places that once the loan officer finishes watching this video or a consumer finishes watching the video, they can open up another tab and immediately go somewhere and get the resources that they need to look for to elevate their credit knowledge game. What can they do and how can they
Specifically, how do they find you?
Yeah, so
SueKnowsTheScore.com. And there is a credit tips for all section. On that section, I have a downloadable credit monitoring app. I have a link to the annualcreditreport.com to check your credit reports. I have a link to myfico.com if you want to sign up for their advanced version and get your mortgage scores as well. And then there's just a ton of documents, and they're all titled appropriately, so you'll know if it's budget or if it's late pays or what have you. I've started to convert those into Spanish, so where's our first Spanish-speaking documents on the website, right? So, amazing. Hey, everyone needs to understand it. It doesn't matter how you speak. Credit's the same language. Doesn't matter what your main language is, right?
Right.
And then loan officers have their own tab, so they can go over there, but the entire website is full of resources for you. So I'll just say Sue Knows the Score can be a one-stop shop for you, and you'll find access to all those things that you're looking for.
That's amazing, and that's awesome. We barely scraped the surface in this conversation because honestly, there was about 3 things that I thought about saying, and I thought, you know what, that's going to take us into a philosophical rabbit hole that's never going to end. So I refrained from it, but I got to tell you, when these new scores come into play and things start to change, and then eventually the government agencies start to decide which direction they're going to go, which ones they're going to accept over the other, if they even do that, we're going to have you back on, because we're going to need your guidance all over again. And I'm sure all our viewers are going to want to know, hey, what's the difference now versus when Sue was first on the show?
Oh, no, this is definitely going to be you'll be a recurring guest, right?
I love it. Thank you.
I have a goal to shoot 1 million episodes.
I like it. If I'm still at 40 years, come on, Joel.
Listen, don't worry about it. We got another 40 in you. I feel it. So Sue, thank you so much for sharing. And so guys, if you're a loan officer, you're watching this as far as a consumer. Oh, also, we didn't even mention, you mentioned consumer reports, but here's a little tidbit. You can actually go get your business credit report as well, which is a completely separate report. I don't know if Sue, if you do that, but if you are a business owner and maybe you want to see what that business credit looks like, that's like an entire other rabbit hole that we could jump into, but I think it's pretty cool. So if you're a loan officer watching this, guys, we give you all tools and resources necessary to succeed in this industry, right? And one of the biggest things is empowerment, right? And you have an entire website, SueKnowsTheScore.com, where you can get access to every resource your client would need. And if you're simply not grabbing this and creating content with it, or grabbing this and creating an email newsletter with it, you're just missing out. You're just missing out. You're really not empowering your homeowners, because if you're telling people, hey, this is how to fix your credit report, and they see you as the go-to person, I mean, why wouldn't they use you?
Yeah.
Why wouldn't they use you? So Sue, thank you so much. Thank you so much for joining More Money episode 14. We just happy to have you here. And if you have any closing thoughts.
Check your credit, monitor it, empower yourself and the people around you. That's it.
Love it.
Awesome, Sue. Thank you so much. Enjoy the rest of your day.
Awesome. Thanks, Sue.
Bye.
That was awesome.
Yeah, great job.